I want to add some cryptocurrency to my portfolio. Should I be looking to pick individual coins that I think will be winners, or should I try and buy a basket of coins? And if I get a basket, how many coins should I get? And then how should I, weigh each coin? Should I be having them equal, or should I do it differently?
Yeah, so this is kind of interesting because I'm not an expert at cryptocurrency per se, but I relate it to the way that these indexes are set up. If I was going to go out and do cryptocurrency, I would do it very similar to these market weighted indexes. So if you went to Coinbase, it gives you access to, quite a few different currencies. I mean, sorry, cryptocurrencies. And you can calculate kind of what the market cap is. How many of those coins are available essentially versus the value of that coin right now and figure out the market cap. So I might take 5, 10, 15, or 20 of those top ones in terms of market cap. And the number would depend on how much, I have to invest, right? So if I didn't have much, I'd probably stick with 5. And if I was investing a lot, I'd probably go closer to 20. And I'd take those top 5 to 20 cryptocurrencies by market weight, and I'd create my own little index. And I'd buy on the same percentages. So if one of them, the biggest one was, 7% of the 20 I was going to buy, I'd buy 7 of that and 6 of the next ones and 4 of the next one, etc. And that's how market cap weighted indexes work. And the thought process, actually, this is one of the Vanguard's advocations, is that the market is already voting on what they see as the best. And so whatever is the highest market capitalization it's getting the most votes from the market, right? And it doesn't mean that there won't be another one that comes up and supplants it at some point in time. But that's why you would maybe adjust that index based on, what you adjust your holdings based on what's happening with that market capitalization, maybe once a year, once a quarter, or something like that, depending on how active you want to be. So I think beyond that, once I've created my little index, I might go, if I had something beyond that that wasn't in the top 20, I call that the targeted index. I might go out and buy 1 or 2 or 3 of those little altcoins that I think just have great potential. I'd keep my bets smaller in that area. I'd probably do it very much like I do my current portfolio, with 75% in that index-based thing that I just created. And then the other, 25% might be in these little altcoins or something like that I happen to think, because there's bound to be something outside of that top 20 list that you're excited about for some reason. And so I probably would keep some, fairly tight reins on things, but that's difficult to do because they do move so much. Probably just means keeping the dollar amount smaller. Because actually, for most things, if they really, really work, you don't need a lot of money. I have a client that bought $14,000 worth of Apple back in '96 when it looked like it was falling apart. It's worth over 3 million now. So it doesn't take a lot of money sometimes to make a lot of money if it's going to work.
Yeah, and we've touched upon this concept too with like when we talk about mega trends, how we can't really pick the initial stock winners out there. Like there, when Amazon came out of like the .com boom, we can't pick the next Amazon, but if we buy everything or a big portion of it, we still have that like chance that we'll still go up with that boom, but maybe not as much as picking a winner.
Yeah, I remember seeing a story where they said, okay, the .com retail stocks, the number one stock back in, I don't know, mid '90s, what have you, was called eToys, and so if you bought eToys, it actually went out of business. And so if you bought Amazon, you would have done spectacular. But if you just bought all of them, and so that's what creating this index would be, you still did really, really well altogether. And so I think especially in these really volatile type things, I would be looking at that kind of diversified. I don't know that there's any indexes available of cryptocurrencies, so I'd be making my own as far as that goes. But that it's exactly right, because I don't know for sure which one's going to go up or which one's going to do poorly, for that matter. And so having that kind of diversified approach to it instead of chasing my tail. Now, if you do get the right one, right, that's the best thing. You can really win if you happen to pick the right one. But that's just, if I happen to win the lottery, I can be quite wealthy also. So I like to diversify that risk out and maybe play on the margins, trying to guess which one's going to be the right one. I like both. I like that kind of buy and hold index combined with that kind of targeted, slightly skewed, concept of trying to figure out where things might be going. I feel that, kind of bridges both types of investing.